Buying an investment property can be intimidating at times. However, as our expert guest today, Suzanne Barba, CPA and taxation expert for the last 20 years, can vouch for it, it is one of the easiest way to build wealth. And Suzanne is going to tell us all the tricks that we can employ to start building wealth while we sleep, so to speak. So, Suzanne, thank you very much for joining us today.
Good morning, Bipin. How are you?
I'm great. I'm great on this beautiful cold morning, but
yes,
that is
frost. Frosty morning.
well. I mean, it is November. It is expected. We have had some nice weather so far, but we have to accept the weather.
That's right. That's right. Winter's coming.
Yes.
Mm-hmm.
So, Suzanne, you have been a CPA. You have master's in taxation, and you've been helping out small businesses and people plan their taxes and save money. That is your main goal.
Mm-hmm. Save money. Right.
Save money. Yeah.
You work hard for your money, and you know what? You want to keep it and not give it to the government. Legally keep it, right?
Right. And you work hard to help people who work hard save money.
Right. Mm-hmm. I do. Yeah. That's a passion of mine.
Mm-hmm. I know. And you're also an adjunct professor at the Widener University and a member of Monmouth University's Business Council. So you've been doing a lot to help communities plan their financial and save taxes the right way.
Yeah, it's a pretty busy act two in my career. Yes.
Yes. I hear you. And you have been one of our most decorated guests.
Oh, wow. Quite an honor.
Yes, you have been a very, you've been a very regular member of our guest panels, and you provided so much wealth of information to our guests. So let us talk about what are some of the benefits of owning a rental property.
Mm-hmm. So owning real estate generally, right, is a good way to save money on taxes. When you own an investment property, that's like putting the icing on the cake. Because when you think of an investment property, that's really a business, right? Different than your residential, your primary residence. Your investment property is a business, and as a business, there's many more expenses there's expenses to keep up an investment property, just like there are expenses to keep up your home. However, from a tax perspective, many of those expenses that you use to keep your home updated aren't deductions on your tax return. Whereas if it's an investment property, it's considered a business expense, and business expenses are going to be deductible. They are deductible against, say, any rents that you receive. So that puts you in a really good spot because you can have rental income coming in. So there's cash flow, but there's expenses so that rental income doesn't get fully taxed.
Right. So you deduct all the expenses that you pay towards insurance, mortgage, taxes, maintenance, and a lot more.
Those probably the biggest one, Bipin, is depreciation.
Absolutely, yeah.
Right?
Yeah.
Because
which actually doesn't take which is not actually something that the property owner pays, but but that per taxation code that is allowed. Why don't you tell about that?
Sure. So, on your primary residence, it may appreciate in value, it may depreciate in value, but what you paid for it, right, plus any other improvements you make, that's your cost. And that pretty much stays the same, right, until you go to sell it. With an investment property is an asset, and assets are depreciable for the most part. And depreciating means that you get a deduction every year. It's a paper deduction because you're writing down the cost slowly, right? Writing down the cost of the property. So if you spent, I don't know, $100,000 on the property, that's your cost. And then you would use IRS guidelines to take a little bit of that. And then just for, for ease of presentation, I'm going to say it's $100,000 that you paid. You're going to depreciate that over 10 years. So that means you get an expense of $10,000 every year, because it's 100,000 divided by, say, 10 years. And we're, across straight line. And that $10,000, you didn't really lay out any money, but that $10,000 can go against any income that you have and reduce that income that would be subject to tax.
Right. So you're paying less tax by owning an investment property.
Upfront, yes.
Upfront, right.
Because when you sell it, right, if there's a gain,
right,
you have a lower cost basis that the proceeds will, so it'll be proceeds minus your cost and your cost minus depreciation. But, if you hold on to the property, that's a long way out.
And it is going to appreciate, hopefully
it
significantly.
Appreciates.
And as you pay your mortgage, if you have bought a mortgage against that, then you are paying down your mortgage, you're building equity. And eventually, after 20, 15, 20, 30 years, you would have paid off that property. So then you are making a lot more money out of that.
Yeah. So again, if I compare it against your residence, so today on your taxes, there is a cap on how much you can deduct for real estate and state income tax. It's $10,000. Unfortunately, in Chester County, $10,000 is not that high for real estate taxes. But if you have an investment property, you don't have that cap. So if your real estate taxes are $12,000, you get that full $12,000. And if some year you have a loss and for some reason you're not able to deduct it, then that'll just carry forward onto the next year or next year. You don't lose it.
Right. And right now, during this pandemic, if you have vacancy or such other events, then you can take that loss on your income if that is,
as long as you are materially participating in the business.
Right.
So if you, probably one of the other things that the rules changed fairly recently over the last couple of years. So there is this 20% deduction called the Qualified Business Income Deduction, QBI. And it allows, whatever your net profit is, if you meet the requirements, if your net profit from your investment property is $100,000, you could take a 20% deduction off the top. So instead of being subject to $100,000 of net income from the investment property, you would be subject to 80,000. So taking off 20%. That had not been applicable to real estate. They changed the rules so that now, as long as you, again, are materially participating and it's a test, how much time do you spend on this property? If you pass that test, then you could, again, shelter 20% of the net income.
And is that 20% for 2020 or 2021?
It doesn't sunset. I don't think it sunsets until 2025. So you could do it 2020, 2021.
Oh, okay. And are there any other limitations on who can use it and who cannot? If they meet that other requirements.
So first you have to make sure that you're considered materially participating in the business, in the real estate business of that property. You pass that test, then there's other income limitations, but those income limitations are pretty high. So for the most part, right, people should be able to take that 20% haircut.
Right. And another way people can get into real estate investment is if there is a multi-family unit, 2 families or 3 or 4, you live in one of them, get the lower mortgage as a residence, and then they can rent out other units which will more than pay the mortgage, so you are then living there for free.
That's a great strategy. So if it's a multi-family residence, you can still get a mortgage, a residential mortgage, as long as you live in one of the
live
units.
in one of them.
So interesting.
So you have to live in at least for a year.
Okay.
And then you could move out, buy another property, and rinse and repeat.
Wow, I did not know that.
Yeah, that's a great housing hack.
So then, Bipin, what happens then? You allocate the mortgage payment between, let's say it's 4 units and they're all equal size, so it's 25% and for each. So 75% you'd say of the mortgage goes toward the investment properties, and 75 to the investment properties, 25 to you.
I would think so. I mean, I have seen this being done, and it is one of the best housing hacks that I have.
Interesting. I've not seen that. That's a great idea.
Yeah.
Because I've seen it with businesses, right, where you buy a building, your business is in one unit, and then you rent out the other ones. But yeah, interesting. What a good tip.
You could even have a duplex. You live in one unit and rent out the other one, so you are basically living there for free.
Yeah.
The tenant is
as long as the rent covers the mortgage. Taxes. Absolutely. But interesting. Interesting.
And one more thing we wanted to talk about investing was that as you build equity, you're building equity along as you own it for years. And one of the right. And one of the other benefit of investment property, I believe, is real estate prices as they are going up. You are gaining the value, gaining your property prices are appreciating. So we have depreciation on one end, tax benefit, and appreciation of the assets.
Yeah.
As you own.
I know the prices in the residential market were a little crazy, for a while. How have they been in the commercial market?
Well, as far as residential, even single family or multifamily, prices have gone up there too, and rents have also gone up in most markets because of the shortage of housing units.
Yeah, I heard. Oh, this is pre-pandemic, so I had heard a quote that because there was not enough houses being built over the prior 10 years, that it will be at least 20 years before there is enough housing for the need, for the demand.
Right. Pandemic definitely exacerbated the shortage. But as you rightly said, about 8 to 10 years prior to pandemic, there was not enough demand for new homes. So builders and all the allied industries were cutting down on producing lumber and other materials because there just was not enough demand. However, with pandemic, it changed the dynamics. People
Mm-hmm.
can now don't have to live close to work, don't have to live in a city close
Mm-hmm.
to factories or businesses. They can live in Lancaster County, far, far away, and still be able to work
Right.
wherever you are able to work remotely.
Mm-hmm.
So that migration wave has started, and as a result, during pandemic we were short. We were locked down for a couple of months. We could not do
Mm-hmm.
any business. People wanted to move and they could not do so. So that is why we are seeing that effect on the housing market. And since there is a shortage of homes, people people have been forced to stay longer in rental properties,
Mm-hmm.
and that is that's why we have seen such a explosive growth in our communities in terms of rental units, in terms of new home starts and new home construction, and shortage of labor that has also
Oh yeah.
contributed to higher prices,
Mm-hmm.
delays in building materials, and higher cost of materials. So that's why home prices have gone up, even in new construction.
Mm-hmm. Yes, I'm sure. I'm sure. And right, they can't build them fast enough.
No, and that's why what we are now seeing is some builders have been very innovative. They are doing prefab homes, and also they're using 3D printer technologies to create those components.
Mm-hmm. I so I know a little bit about 3D printers, not a whole lot, but I was talking to a client just this week, and we
Uh-huh.
started talking about 3D printers because he has one,
Yeah,
and
yeah,
I
yeah.
said, well, what do you do with it, right? Because he has it in his home. What do you
Right.
do with it? And he said, well, if I have to do a repair in my house, and I don't have the right tool, I use the 3D printer, and I make the tool that I need. I was like, wow, no, who would have thought that?
Not only
Mm,
tools, but parts. Many
mm-hmm.
of the parts can be built using those 3D printers. They have come a long way.
They have. And I
Yeah.
guess you could have them come out, use plastic.
Right.
So it's
Right.
not paper,
Yeah.
you're not
Yeah.
making a
Yeah.
paper like a, like a little origami thing.
Right.
Yeah,
Right.
pretty interesting. Pretty interesting what could happen.
Right. 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 So
Yeah.
yeah. So we got to talk about some of the nicest benefits that we have as a real estate investor.
Mm-hmm.
Why don't we in 2 minutes summarize all the benefits?
Sure. Well, it's a business, and a business so many times is a great way to shelter your income from taxes because all of the expenses that are related to that business are deductible. So first you have here's my income, here's the expenses related to earning that income, which is all the expenses related to the investment property. Those are all deductions. They all shelter that income from tax. And then on top of that, the IRS, not Pennsylvania, just the IRS, allows that you could have, the qualified business income deduction, so that 20% of the net income from your business is not going to be subject to tax. In the beginning years, right, with depreciation is just a paper expense. It's not money you're laying money you're laying out, but it reduces any rental income that you have without you taking a dime out of your pocket. So it's a great way to shelter.
Right, right. And when you have when you have a property that is rented out, they're paying rent, and hopefully that covers all your expenses and saves you some money. So you have that positive cash flow.
Mm-hmm. Mm-hmm. Yes. So right, being a landlord is never easy. right? You have to have the right tenant. Don't want to paint a full rosy picture, but if you get the right tenant, and one of the things I've seen some friends do is when their children are going off to college, they buy a property in that college town.
Yes.
So that their child can live there, probably take in some roommates, covers the mortgage, and there's a really good chance that property will stay rented long after your child has left college.
And not only that, if at the right location and bought at the right time, it would have appreciated greatly in value.
Yes. Anyone who bought property down in Newark by University of Delaware, right, is sitting on a gold mine now.
Right. Yeah. So student housing is one good market in selected college towns, and property prices there have significantly grown up. And I remember when I started, I was thinking about buying my first property many years ago. I was told all the horror stories that you may get a call in the middle of the night, and like in any business, there are good, there are bad, and there are ugly. However, people just try to scare you about all the negatives. You can always have a management company to take care of your managing the property, and that is definitely a great way if you are not doing that full time. But if you have multiple properties and you want to manage on your own, you have to learn. You have to have a team to manage the rentals, and for most part, you would make out good. I mean, there is no guarantee in any business. You could lose money too, but once you become better at it.
Right. So when you use the management company, you probably can't use that 20% qualified business income deduction. But so, if you want a vacation property, right, that might be a great way to do that. You buy let's say a condo, right, down at the beach because your family loves to go to the beach. You can use that. You can use that up to 14 days without putting at risk the fact that it's an investment property. So you can, right, if you say, all right, I'm not so worried about the qualified business income deduction. I'm going to buy this condo. Just as you said, you have a management company who takes care of it. And we used to have a property in South Carolina because my husband loved to golf and we loved the beach. And you know what? We had that condo the management company kept it rented out, and we would go down on vacation, to take advantage of it. So that we could use it as a family. And then, my husband would go down to make sure that the property was in good working order. And while he was down there, he played a little golf.
Right. Hey, I mean, you can always mix business with pleasure.
That's right. And it was deductible because it was, business travel. So there's a lot of great opportunities depending upon if you want to put a toe in the water, a foot in the water, but there's still good opportunities out there.
And people can always reach out to you at SuzanneBarba.com, as we have it displayed on the screen here. And I know you have been very kind to our viewers and have offered them consultation and guiding them on how they can make the best use of the taxation laws.
Right. On my website, there's a calendar. You could book time. You could send me an email. And as always, right, the first consultation is free.
Right. And they can reach you at Suzanne at SuzanneBarba.com.
Yes, that's my email. Or on my website. Trying to make it easy.
Yes, absolutely. So there are a lot of benefits of being a real estate investor. If you can manage it on your own, fine. If not, there are management companies out there. And you definitely need a good team on your side.
Mm-hmm.
To find a property, you need to work with a realtor who has experience as a real estate investment. I've been doing this real estate investment for over 20 years and been a realtor. So I've been helping my customers buy and make
Mm-hmm.
good decisions. And then you also need an attorney and CPA and contractors, and there's no one better than Suzanne Barba that I know of
Thank
who
you.
who will guide you the right way with all your taxations and tax filing.
Mm-hmm. Yeah. And if you're someone who's thinking about retiring, what a great way to get a stream of income, right? With I don't want to say little investment, but certainly something that's manageable.
And people think that they need a lot of money to buy a rental property, which is it depends. However, one of the
Once you buy one, it's really easy to buy others.
yeah, and that's a good thing. That's a good thing. Now,
Mm-hmm.
one of the best ways to find money if you don't have money sitting in your bank is to look at your home equity situation. If you have built equity in your home, you may be able to take home equity loan, and you can use that to buy a property. That is a one way to start. And then
Mm-hmm.
once you have a property that is rented out, there are many banks who would loan you money as you have cash flow coming in. You just have to
Mm-hmm.
document that. You just have to provide the proof that your property is making money.
Yeah.
And
Mm-hmm.
that is how I started out. I bought one, and then the bank gave me money to buy more. So
Yeah.
that
Local banks are great for helping local people.
yes.
Mm-hmm.
And it is always a good idea to borrow money to buy
Cheaply. Now,
cheaply. Yeah,
money is cheap now to borrow.
Right. And always, using banks' money to buy and pay them back, and you can keep growing your business.
Mm-hmm. Yes. Always nice to use somebody else's money. Just remember, you have to pay it back to them.
Absolutely,
That's all.
there is no free. There is nothing free.
Mm-mm. Nothing free.
You're getting that money, and with the interest rates that are so low, you can't go wrong. And I know for business properties, for rental properties, you may pay a little bit more interest, but it's still
It's deductible. Just think you're going to get it's every dollar, right, is not really costing you $1.
Right.
So because of the taxes that you get a deduction for.
So Suzanne, I really appreciate you joining us this morning.
Thank you, Bipin. Thank you for inviting me again.
You're very welcome. Do you have any final thoughts for our viewers?
No, just to everyone, have a great holiday season. I know Diwali is starting, so to all, have a very safe, happy holiday.
Great. Thank you very much. Happy holidays to you too, Suzanne, and I'm sure we will talk again soon.
Very good. Thank you. Have a great weekend.
You too.
Bye.
Bye-bye.